Welcome back. Today I want to look about the financial statements of a partnership. So there are a number of ways in which a partnership may be defined. Okay, so a partnership includes at least two individuals, and the maximum number of people who can form such a partnership under the law is 20. Okay, it also involves a business arrangement, profit motive, and also is an incorporated business entity, which means the principle applies to a partnership. So for accounting purpose, the partnership is a separate entity from the partners, or the partners have unlimited liability, and if the partnership is unable to pay its liability, the partners may be called upon to use their personal assets to clear unpaid liabilities of the partnership. So we have the two types of partnership. We have the general partnership and the limited partnership. Let's continue. So here is a partnership agreement. The partnership agreement, the names of the firm and the location of the business. Then another one is the nature of the business to be carried on by the firm. The amount of capital to be contributed or left in the business by each partner. Then you have the ratio in which profits are to be shared. One partner may be entitled to a greater share of the profit because he has more expense or is doing a greater share of the work. Another agreement is that the rate of interest to be allowed on investment capital and the rate of interest to be charged on drawings. Salaries to be allowed to partners and other benefits such as commissions or bonuses. And you also have any variations in the issue rights for partners. You have the method to be followed on admission of retirement for partner. A method to be followed in the event of dispute among partners. You also have the duration of partnership, as well as the manner in which accounts are to be prepared and inspected. So those are the partnership agreements. Let's look at the rights of partners. So every partner has a right to take part in the conduct and management of the business. Then every partner has a right to be consulted and heard in all matters affecting the business of a partnership. So every partner has to be consulted. Then every partner has a right of free access to all records, books, and accounts of the business, and also to examine and copy them. Then every partner is entitled to share in the profits equally. Then a partner who has contributed more than the agreed share of the capital is entitled to interest at the rate of 6% per annum, but no interest can be claimed on capital. Let's continue. Then a partner is entitled to be indemnified by the firm for all acts done by him in the course of the partnership business. So for all payments made by him in respect of partnership debts or liabilities, and for expenses and disbursements made in an emergency for protecting the firm from loss, provided he acted as a person of ordinary prudence would have acted in similar circumstances for his own personal business. Then every partner is, as a rule, joint owner of the partnership property. is entitled to have the partnership property used exclusively for the purpose of the partnership. That is also another rights. Then a partner has power to act in an emergency for protecting the firm from loss, but he must act reasonably. Then every partner is entitled to prevent the introduction of a new partner into the firm without his consent. Then every partner has a right to retire according to the deed or with the consent of other partners. If the partnership is at will, he can retire by giving notice to other partners. Then every partner has a right to continue in the partnership. Then a retiring partner or the heirs of a deceased partner are entitled to share in the profit earned with the aid of the proportion of assets belonging to such outgoing partner or interest at 6% per annum at the option of the outgoing partner or his representative until the accounts are finally settled. So those are some of the rights of the partners. Now let's look at the duties of partners. So every partner is bound to diligently carry on the business of the firm to the greatest common advantage, unless the agreement provides there is no salary. Another duty is that every partner must be just and faithful to the other partners. Then a partner is bound to keep and render true, proper and correct accounts for the partnership and must permit other partners to inspect and copy such accounts. And every partner is bound to indemnify the firm for any loss caused by his willful neglect or fraud in the conduct of the business. The partner must not carry on the competing business nor use the property of the firm for his private purpose. In both cases, he must hand over to the firm any profit or gains made by him, but he must himself suffer any loss that might have occurred. Also, every partner is bound to share the losses equally with the others. The partner is bound to act within the scope of his authority. And no partner can assign or transfer his partnership interest to any other person so as to make him a partner in the business. So those are the duties of a partners. Please, if you have any question, write it on the comment and I'll discuss it below. And also for any personalized coaching, please reach to me through the comment. Also, you can take the screenshots as we continue. So let's continue. Now we are going to look at the powers of our partners. So we have the buying and selling of goods in case of a trading firm, then receiving payments on behalf of the firm and giving valid receipts, also drawing checks and drawing, accepting and endorsing the bills of exchange and promissory notes in the name of the firm. Okay. Also, borrowing monies on behalf of the firm with or without pledging the stock in trade. Also, engaging servants for the business of the firm. So those are the powers of the partners. So we are going also now to look at the case A. Cases a partners has no powers. There are those cases that a partner will not have the powers, like submitting a dispute relating to the firm to arbitration. Also, opening a bank account on behalf of the firm in the name of a partner. Also, compromise or relinquishment of any claim or portion of claim by the firm, so withdrawal of the suit or proceeding filed on behalf of the firm. We also have admission of any liability in a suit or proceeding against the firm. Also, we can also talk about the acquisition of immovable property belonging to the firm. Also, transfer of immovable property belonging to the firm, as well as entering into partnership on behalf of the firm. So those are the cases a partner will not have powers. So like also we look at the types of partners. So we have various types of partners. The first is, we call him the sleeping or dormant partner. Is the one who is in reality a partner, but whose name does not appear in any way as a partner, and who is not known to outsiders as a partner. So this is a sleeping dormant partner. We have but as well, he is also liable to those third parties who subsequently discover that he was or is a partner. So he has no duties to perform, but he has the right to access to the books of account and of examining and copying them, even if he is not in reality a partner. Then we have the nominal partner. So this one is a person whose name is used as if he was a member of the firm, but who in reality he is not a partner. So these are the two different. In nominal is the name which is used, but in sleeping, in reality he is a partner, but he does not appear in any way as a partner. Okay, let's continue. And as well, this partner in profit, the nominal partner is liable to those third party who give credit to the firm on the strength of his being a partner. And also in profit only is one who get a share of the profit and does not share losses. So he is liable to outsider. He doesn't take part in the management of the business. We have the partners by estoppel or holding out. So is the one who, without really being a partner, so conduct himself as to lead others to believe to be a partner. So similarly, if one is declared to be a partner and does not disclaim the partnership, one will be treated as partner by holding out. So such person is liable to those third parties who extend to the firm on the behalf of that such person and partners. So that is what's done by estoppel. Then we have the sub-partners. So he get a share of profits of the firm from one of the partners. So the sub-partner has no right against the firm, and he is also not liable for its debts. Okay, let's continue. We continue. We have the incoming partner. This one is who is newly admitted to the firm. So if he is newly admitted to the firm, he is not liable for the debts and the obligation of the firm incurred before his joining the firm unless he so agrees. Then you also have the retiring or the outgoing partner. He continues to be liable for obligations incurred before his retirement, and he will continue to be liable even if for future obligations he does not give public notice of his retirement. So he is an outgoing partner. He continues to bear the obligations. Then we also have the minor partner. This one admitted to the benefits of an existing partnership with the consent of all the partners. So the minor is not personally liable for the debts of the firm, but his share within the firm, within the partnership property and profits of the firm will be liable for the firm's debt and obligation. So he can also bring a suit for accounts and for his distributive share when he wants to sever his connection with the firm, but not otherwise. So that is all about the partnership. So let's continue. Hope you are taking some screenshots as well as some notes. So in the absence of any agreement, sometimes there is the partnership has not made any agreements. So in the absence, no partner has the right to the salary. So there will be no salary. Then no interest is to be allowed on capital. So if allowed, it is an appropriation of profit and a charge against it. So if the profit is less than the interest to be allowed on capital, the interest will be limited to the profit. In case of losses, no interest will be allowed. Then there is no interest to be charged on drawings. Then interest at the rate of 6% is to be allowed on partners' loan to the firm, as well as the profits and losses are to be shared equally. So those are the things to be done in the absence of any agreement. Let's look at the introduction to partnership accounting. So we are going to look at the things we are supposed to do in the partnership accounting. We have the share of residual profits. So amount of profit available to be shared between the partners in the profit and loss sharing ratio after all other appropriations have been made. So this is what we call the share of residual profits. Then we also have the interest on drawings. So this one is a debit entry in the partners' current accounts and credit entry in the appropriation account. So that will be also in the accounting. And then we also have the appropriations of profits. So the income statement will be debited, but the profit will be credited to the appropriation account. Then we also have the partners' salaries. So you have to debit entry in the appropriation account and also credit entry in the partners' account. So usually the current account before the residual profit is shared. So that is about the partner's salary. So let's continue. Also the interest on capital, we have a debit entry in the appropriation account and also and are completed by a credit entry in the current account of the partner to whom the salary is paid. So that is on the interest of capital. Then interest on drawings, you have a debit entry in the partner's current accounts and a credit entry in the appropriation account. So these are the partnership accounting treatments that we need to undertake. So we can continue. We have a distinction between current and fixed capital. So a partner's total capital is the sum of the balance on their capital account and their current account. So the total capital. So a capital account is usually fixed, while the current account is the current total of appropriations and the share of residual profit or loss less the drawings. So these are the distinctions between a current and a fixed. So for capital account is usually fixed, while the current it involves all the total appropriations and the share of residual profits stroke less minus the drawings. So let's look at the formats of both. So for the current account format, we draw a T format like this one, where you shall have a debit and credit side. Then on the debit, on the left hand side, you shall have the balance brought down for the partners. Then you have the interest on drawings shall be on the debit side. Also the drawings shall also be on the left side. On the right hand side, credit side, you have the balance brought down as you can see, the interest on capitals. So you have to have the interest on capital, and then the salaries, the share of profits, and their own interest. So both sides shall have the balance carried down. So after we earned, so the difference is what we shall write below the balance brought down on the differences of any of the both sides. So we shall have it as that. So this is the format for the current account. For the fixed capital, it is the same case, whereby on the left hand side you have the loss or variations and goodwill written off. So those are the debit. On the credit, you shall have now the balance brought down. You shall also have the gains on variations. Also, we shall also have the additional capitals. So we shall have these additional capitals. 1 minute. So additional capital, the cash book or the assets, shall also have them. Then you shall also have the goodwill balance carried down. So the difference, then you shall also have the balance brought down. So these are the two fixed, the two format, the fixed account, the fixed capital account, and the current capital account. Then we also have the format for the appropriation account. So we start with the net profit for the year. So you have to have that, whereby we now add the interest on drawings for all the partners, their names. Here we are representing them as A, B, and C. So we add their interest. We shall have to raise their interest on capital. Then we shall also raise their salaries. Then after that, we are going to get the balance of profit to be shared in percentage ratio. So this is the ratio of their contribution to the partnership. So the profit, you have to multiply with their ratios, so that at the end you shall get a nil balance. So this is the format of appropriations. So let me give you a minute. Take the screenshot for the current account. And please, if you have any question, please write in the comment. I'll get back to you in a moment. As well as any personalized question, you can reach at me through the email or through the comments. You have the fixed capital, can take a screenshot for that. Then you also have the format for appropriation account, as you can see. So this one will depend with the things the members have done. If there are no salary, no interest, they are not going to involve to add that on the appropriation account. So let's look at the illustration below. So we are told presidential premium and the foreign profit sharing clauses in their partnership agreements. We had a 5% interest on capital based on average balance. A Clinton 40,000 opening balance. Then you have the Bush. We are told 60,000 opening balance. Obama 20,000 opening balance. Then we also told the 5% interest on current based on opening balance, except if they are overdrawn. I have Clinton 10,000 opening balance, Bush 5,000 opening balance. We also have Obama 5,000 opening balance. We have the interest on the advance from Clinton is paid at 5%, treated as an expense. You have Clinton loaned the partnership 30,000 at the start of the year. Then you have 10% interest. 10% interest on the average level of drawing during the year. drawings made evenly throughout the year. This is 15,000, not 5. Then we have 10% interest on average level of drawing during the year. The drawings were made evenly throughout the year. Then we are told 20,000 on Clinton, 30,000 on Bush, and 20,000 on Obama. We also have told residual profit or losses are shared in the same ratio as the partners. And capital contributions, salaries, partners, we also have 50% on Clinton, 50,000 Clinton, 60 on Bush, 45 on Obama. Then the last, the partnership made a profit for 250 during the year. So Bush contributed 10,000 van halfway through the year, so required an appropriation statement. So here we are told to make an appropriation statement. So we are going to look to take this format for the appropriation account. So the first thing we are going to start with is the net profit. So you can take a screenshot for this one. So we shall start with the net profit. So we are told that a partnership made a profit of 250,000 during the year. So that will be our starting. So writing the title, appropriation statement for presidential cleaning for the year ended 31st March 2014, as that is their year ended. So profit is 250. So we have to less the interest. So the interest on loan, we have 15,000. 1,500, not 15,000. We have 1,500. Let me see where it is. So the interest on loan on Clinton, we are told that interest on the advanced loan from Clinton is paid at 5%, treated as an expense. So Clinton loaned the partnership 30,000 at the start of the year. So the 5% of 30,000 is the one that we are now going to take as the interest on loan, which will be 1,500. So you have to raise that from the profit. We get 248,500. Then we also have to earn interest on drawings. So we have interest on drawings. We have for Clinton, Bush, and Obama. On the second part, add interest on drawings. So here we are told that Clinton, on note 4, we are told that 10% interest on average level of drawings during the year. Drawings made evenly throughout the year. You have shilling 20,000 Clinton, 30,000 Bush, 20,000 Obama. As you can see from note 4. So this one. So since these are the drawings made evenly throughout the year, we are going to trace the 5% on the current based, except if they were overdrawn. So we are not going to trace that for 10. So for the 5%, which you have been told is the interest on the current based, so the 5% on the 20,000, which was made evenly throughout the year, so shall give us 1,000 for Clinton, for 30,000 for Bush shall give us 15, and also 20,000 for Obama shall give us the 1,000. So we add the interest on drawing to get 35. So the total will be 252,000. Then we have to raise the interest on capital. So we are told that the capital contributed by Clinton, Bush and Obama. So we shall look at our instruction. We have been told the 5% interest on capital. Let me find that. %5 interest on capital based on average percent. So if you can look at this, we are told the 5% of 40,000. So we shall have 2,000. So the interest on capital is 2,000. For Bush, it is 60,000. But he had also contributed. Bush contributed a 10,000 van halfway through the year, so half. So plus 5,000, which is shall multiply by 5%. So the 5% will give us the 3250, and then we have a contribution for Obama, which is 20,000. So which will give us 1,000. So the interest on capital, we shall get as 2,000 for Obama, that 250 because he contributed 5,000 more, and then we also have 1,000 for Obama. So we less that, which is 6250 to get 245,750. We shall also have to less interest on current. So the opening balance here, we have been told 5 interest on current based on the opening balance, except if they are overdrawn. So and we are told interest on the advance from Clinton is paid 5%, treated as expense. So Bush had an overdrawn, so we are not going to calculate the interest on that. So we get interest for Clinton, which is 5% on the 10,000, which is 500 at Obama, and the 5% for the 5,000, which is 250. So we shall also add both and we less. So we less from interest on capital to get 245,000. We shall also less their salaries. So we are told salaries, residual profit or losses are share in the same ratio as the partner's capital contribution. So salaries for partners is 50 Clinton, 60 Bush, and 45 Obama. So